Okay, everybody, it's me, Gregory Mannarino. It is Thursday, January 27, 2022. What an insane, wild ride in this market overnight. I did a special report video for all of you. Wow, that's all I have to say. Let's talk about this, people. I don't even know where to start. We got some economic news I want to cover and a whole bunch of other things, but let's just put a perspective on what happened yesterday. What an epic freaking day. I had said that markets were going to move yesterday, and they certainly did. And the way this played out, it's suspicious to me. Anyway, so again, what happened? The Fed failed to act, and what was a very nice rally in this stock market yesterday fell, and in the overnight session, stock futures were down across the board. However, right now, stock futures are higher. Let's put that into perspective. So what are we talking about? Between the sell-off yesterday from the high with regard to the Dow and the sell-off in the futures market last night, we had a 1,000 point swing in the Dow and Dow futures. It was out of control. But they pull things out of a hat. It's like magic what they do here. But it shouldn't surprise you either. Look, in my opinion, obviously we know there's something much more, diabolic going on here with regard to the Federal Reserve. They are deliberately destroying the economy. They are deliberately wiping out an entire class of people who sit there and are allowing this to happen to themselves, believing that things are going to change. Yeah, they're going to change. They're going to get a lot worse here. I guarantee you that. There's just no doubt about it. Anyway, what an epic day yesterday was. And today, let's see what happens. It's an incredible situation. Again, between the market sell-off yesterday and the futures markets, we're talking about a wild ride. And that ride may continue today. So anyway, with that said, so let's start off with what's going on. So as I said, stock futures are higher, pointing towards a higher open. Not much, but higher nonetheless. Crude oil is now above $88 a barrel. I'm talking about WTI. Now, are you looking at the Dixie? The relative strength of the dollar right now is markedly higher, over 1%. That's a big move here. Keep your eyes on the MMRI. People, look, while we're on the topic of the MMRI, I don't know how many times I have to repeat myself, but it seems like it's quite often. People don't understand things unless it's said to them, I guess, a gazillion times. Some people, not you. The MMRI is not a market crash indicator, okay? It is a risk indicator. And even though we are in the yellow zone or moderate risk, it doesn't mean there is no risk. How many times have I had to say this? You wouldn't believe the stuff that I get in my email box, the things I'm accused of. I mean, let me just cover that real quick. Many, many months ago, I said right here on this blog and in my free newsletter, link in the description of this video, I said get long COVID, okay? Meaning to be in the market because I believed that the market would go higher on the back of COVID. Well, this proved to be 100% correct. However, virtually every day since that time, and I actually made a comment on this in my newsletter, people are blaming me or accusing me of capitalizing on people's illnesses. Are you kidding me? Is that what you really think I'm doing, some of you? No, look, I am a market strategist. I'm an analyst. I'm an investor and trader, and I call the market the way I see it. When I said get long COVID, I wasn't saying to capitalize on COVID. What I was saying was capitalize on the market because I believed it was going to go higher on the back of this COVID thing. And that's how it played out. You want to talk about capitalizing on illnesses? How many of you own pharmaceutical stocks? How many of you out here that are blaming me for that have a 401k, which more than likely has at least one pharmaceutical company. I'm not a pharmaceutical company. They're the ones that are capitalizing on illness, not Greg Mannarino, who's just telling you how to play the market. Sometimes this shit really gets to me. Anyway, so here's some of the economic news that we got today. Another 260,000 people applied for first-time unemployment claims last week. It's virtually the same every single week, and net every month we are losing jobs, but you're not allowed to know that. But part of the propaganda today, and you're going to love this, is GDP, U.S. GDP fourth quarter put on a nice gain, despite the fact that this is them. This is what they're telling us, the propaganda ministry. Manufacturing falling off of a cliff, factory activity falling off of a cliff. Make this stuff up. I dare you to do it. You can't do it. It's impossible to do. And durable goods orders this morning missed the mark, falling 0.9%, which overshot the estimate of 0.6. But our economy is so strong. It's booming and it's fantastic. As a matter of fact, our economy is so strong right now that the Federal Reserve yesterday couldn't even nudge the federal funds rate a fraction of a percent. Look, people, there's something else going on here, and I said I was going to rethink a lot. The fact that the Fed didn't do anything yesterday except promise more easy money for this market, in my view, look, we know what's going on. The Fed is determined to fulfill their endgame, to own it all, to become the lender and buyer of last resort, to keep the economy suppressed and destroy an entire class of people. The Fed literally is public enemy number one. And I think you all know that. At least I hope you do at this point. Action needs to be taken. You want to be angry at someone? You want to be angry at Greg Mannarino? Well, how about directing your anger at the Federal Reserve instead of me, and who is trying his hardest to keep all of you informed, okay, and on the right side of this market. Was I wrong yesterday about what the Fed would do? Yes, but I was 100% correct about how the market would react. I said if there were no rate hike, the market would drop. And that's exactly what happened, and that carried over right to the futures market. And right now, stock futures are higher, but who knows what's going to happen? We need to keep our eye on the drivers here. The 10-year yield, 1.83, okay, not too horrible, but that the Dixie is interesting to me, that this big jump in the dollar, the relative strength of the dollar, whose absolute strength continues to free fall. You all know that. With crude oil over $88 a barrel, the fact that the Fed has a trading desk, do you think maybe there's a possibility that what happened last night in the futures market was the Federal Reserve getting in here and buying? The Federal Reserve has a trading desk at the New York Fed. They're buying the market. They're not just buying debt, they're buying everything. They're not going to allow the market to fall, in my view. They're just going to keep propping it up until they can buy it all, until the middle class is literally gone. Literally freaking gone. Let me see what else I wrote down here today. People, do you realize that the Federal Reserve is responsible for the largest surge in inflation that we have ever seen in the history of the United States? And not one of our representatives has yet called the Federal Reserve to account. Do you find that disturbing? Because I do. I really, really do. Let me see what else I had here to talk about here. I want to cover this real quick. On the back of the dollar, the relative strength of the dollar surging right now, silver is getting hammered. It's down 3.7%, or it was when I looked at it prior to this video. And gold is down 1.5%. Understand what you're looking at here. There's no price action with any type of discovery behind it with regard to precious metals. It's the most rigged aspect of the market, bar none. Bar none. There's nothing that comes close. And realizing that, again, is our strength. We will not stop doing what we are doing. Cryptocurrencies, which is betting against the debt, becoming our own central bank. Cryptocurrencies right now, okay, Bitcoin around 36,000. Expect volatility here, people. I just can't wait to see how today plays out. I mean, with yesterday's sell-off in the market, a 1,000 point swing to the downside with regard to the Dow and Dow futures, and now all of a sudden we're positive, at least we were when I started this video. Anyway, we need to keep our eyes open, as I said. We need to watch the market drivers, as I tell you every single day here. 10-year yield, yield curve, relative strength of the dollar. That's interesting, what we're seeing today. So again, keep your eyes open here. Crude oil, WTI, over $88 a barrel. It's going much, much higher. And the MMRI, which is not a crash indicator. I don't know where some of you people come up with this stuff. It's not a crash indicator. It's a risk indicator. And in my view, it's the best one you're ever going to find. But again, there are some deluded people out here who believe that Greg wants to capitalize on people's illnesses by telling people to get long COVID. And all I meant was get long the market. And did I nail that to the wall? How about 100%? I tell you, you can't help people who don't want to be helped, and you can't fix stupid. That's the truth. All right, look, I'm out of here. I love all of you. Let me know what you think, and I will see all of you later.